again, this is Naveed Tariq, co-founder of TukTuk.ca, an online platform which always cater your needs, your home needs, your office needs, anything you need, tutoring, immigration consultant, electrician, plumber, uh, some accountant, some real estate agent, mortgage broker. All your needs are catered on TukTuk.ca. Now, today we have another interesting episode, and we have a wonderful guest, Mr. Ashraf Khan. He's with us. He's from mortgage industry, and I'm going to give it to Ashraf. Please introduce Ashraf yourself.
Thank you, Tariq, for having me today. And also want to thank you to TalkTalk to give me the opportunity to actually speak about the industry and helping the community. So, like you said, my name is Ashraf Khan. I've been in the industry over 14 years now and working in different roles in the mortgage industry and then the banking. Recently, within the last 1 year, I've been actually working as a broker and trying to help our clients and trying to give them the best opportunity or options for their mortgage needs. In my business, I will always try to see like how I can try to provide the best solution and the best interest and best options so clients are always happy and the best service they can deserve. That's all about me, and also looking forward to actually have this interview and try to help our clients. So if they have any questions.
Thank you so much, Ashraf. So let's start to our topics. We have few questions. Generally, these are the common question which people, when they start in this process of purchasing real estate, so they like to know these things. So one of the main question generally they have is, what is a mortgage broker and why I should work with a mortgage broker?
That's a very good question. Actually, brokers, like in general, what they're trying to help you is to introduce a lender with a borrower. For an example, a client or someone who's actually trying to buy a house, they will try to actually mediate with the clients to try to find out the best uh, rates or best lender that suits with their needs. It's sort of a one-stop shop where you will actually have all the options available for you. So when you actually go to a bank, they actually have certain products that will be like, they will only can do that product only. But when you go to a broker, you have that option to have, let's say, option one, a bank somewhere you can actually get a better home equity plan or home line plan, or somewhere you could actually get, say, your investment property better. Or sometimes in A lenders or where you are not able to, or they don't cater with the rate, what do you call it? They don't have the options when you have a bad credit or don't have enough, a down payment, they can help you with it. So there's actually more than 1,000 lenders that we work with across the country. And we try to make sure that we give the best option that client deserves, or that actually minimize the client's possibility to look around. I just actually come out and just look for one rate or one options or one or two, three more options that will help them to get a better rate, better facility, and better service in terms of their needs they're looking for, the mortgage they're looking for.
Excellent. So what I understood is like if you go to, for example, a certain bank, so then those guys will promote only their own products. But you guys have a portfolio of lots of people, lots of lenders, and so you can choose best interest rates for your clients. That's
Ex-
wonderful.
Exactly. It's like a supermarket for mortgages.
Hmm.
So you can just go to, let's say, Walmart, where you have all the products that you can buy. So
Hmm.
similar way that when you're actually going with a broker, they can actually try to find, like, which product you need and try to help you with it. But
Hmm.
in a bank, when you go there, they have their certain products,
Hmm.
only mortgage or only something, and they have their own guideline and criteria they follow.
Hmm.
So it's actually like, narrows down. But by all means, that borrower also, like, will be available with the A lenders or not. Like, we can try to find that best fit for the client. So, and try to tell them that, this is the best option for you,
Mhm,
and this will help you to, like, help you with your needs.
mhm, mhm. All right, Ashraf, and now, I mean, right now, we can see there is a lot of uncertainty kind of in mortgage industry, in real estate, I would say generally. For the last 6 7 times, if we have seen, Bank of Canada has increased interest rates. So what a buyer especially should go for? Is it good idea to go for a variable rate, or is it a good idea for a fixed rate? What is your
Uh,
suggestion? Yeah.
in my opinion, the rates are, I mean, this jumps is mainly because it's a temporary, and every time they're actually doing it. So basically, Bank of Canada is saying that, oh, we're doing it to control the inflation.
Hmm.
And finally, like, after increasing the rate last time, we actually have seen some changes in, like, if you go to the gas station, the like, prices actually went down, and
Hmm.
also things are actually coming down right now. So it is temporary, of course. Like, you cannot really imagine to have 7 8% or 6%, whatever the rate right now. So looking at the market, the volatile market, if you actually stuck with a higher rate right now, let's say the higher 5 year fixed close rate, for an example, as 6%. I'm just giving an example.
Hmm.
So next 5 years, you will actually going to have that rate fixed for 5 years. So
Hmm.
you're not going to be able to change that rate.
Hmm.
But whereas you have a variable rate, you have that option to lock it in at any time with the lender. So the
Hmm.
same lenders, right? So basically, uh, let's say you go with a variable rate with 5 years. Variable rate only comes with 5 years. So 5 years rate is 5.45, for an example.
Hmm.
And then you see, like, after a year or 6 months down the road, whenever the rate goes down, then you see the 5 years rate for fixed is actually went down to, just for an example, is 3.5. Now you have that option that you can call your bank without paying any penalty. You will be able to fix that rate with the 3.5%. So my recommendation would be for any buyer that actually going on, or even anyone that actually refinancing their mortgage, or it came out for renewal, they should consider, or they may consider, to go with only variable rate, unless otherwise they're catering to, or they're looking for fixed rate only. If they are looking for something more flexible where they can fix the rate in low rate in future, they could actually have the variable rate for now. And I would highly recommend that, because you will have that option to lock it in at any time in future.
Okay. So in current situation, variable rate can be a good option for.
Absolutely, absolutely. And a lot of clients that I actually get right now, they always actually come and ask, like, if I'm going to have a variable rate or fixed rate. Um, Again, like, you really want to have that flexibility. Also, at any time, any point of time, if a client, let's say, want to refinance or buy another house, its variable rate is usually gives you the flexibility to move on. And if you look at overall in the market, at any situation, variable close rate is a little bit lower than the fixed rate in the market.
Hmm. Hmm. Okay, so I mean, we see lots of new home buyers. One of the questions they have is how much I need to pay as a down payment at the beginning.
Right.
So can you give a little brief on that?
That's actually for the first time home buyers. The down payment is a crucial point, like how much I'm going to pay. And there are a few things that I wanted to mention about the down payment, because there's a difference between high ratio mortgage and also conventional mortgage. Well, what does that mean? So there's a default insurance that you have to pay when you have pay less than 20%. So that's actually called high ratio mortgage, where the insurer, for an example, CMHC, Canadian Mortgage and Housing Corporation, and SIGAN is another private default insurer, who make sure that in case the borrower, if they pay less than 20%, they're actually like protected, right? The borrower or the lenders, they're protected, so in case something happened, the lenders are okay. um, um, for the down payment, the minimum down payment that we are allowed by FSRA or the CMHC is actually 5%.
Hmm.
So the 5% is actually based on the first 500,000,
Okay.
and the first $500,000. So for an example, let's say you were buying a house for 500,000 or a condo,
Hmm.
then the minimum down payment you need is 25% or 25,000.
Okay.
And let's say you're buying a house, and which is actually over $1 million,
Hmm.
or like, and then your minimum down payment will be 20%, because the CMHC or the Genvo or SIGAN, they only actually allow you to pay 20%. Like they will uh, actually, like, have the default insurance up to $999,999.
Hmm.
So they cannot go over $1 million. So
Hmm.
if you're buying a house over $1 million, you need to have a minimum down payment of 200,000.
20%.
20%. So minimum 20% down payment.
Hmm.
So it depends on like what you are going for the first time home buyers. And again, so when you are you have to also, like, have to keep this in mind when you're paying that less than 5%, sorry, less than 20% down payment. You need to actually have also like, you have to add that premium with it too, the default insurance premium, which actually gets added with your mortgage. So you don't have to, like, upfront, you don't have to pay that
Hmm.
money. So
Hmm.
it gets added to with your mortgage. So you don't have to take that extra burden with you, like with the down payment, because a lot of people have a understanding about the CMEC fees or the insurer fees. So it gets added with your mortgage completely. So it's you make the payment whenever your monthly or bi-weekly payments you make, it gets added to it. It's a very good question. So most of the time, the clients, when they come in and they wanted to know more about the down payment part,
Hmm.
I think they don't understand. They don't have they get confused with why I need to pay 20%. Why can I not pay 5%? The
Hmm.
only reason behind it is the price of the house.
Hmm.
And down payment, you can be many different sources too. So it could be your savings, you could be gifted from your parents, and if it's actually second home, like, if you're buying a investment property, it has to be from your own savings. It cannot be gifted, and the
Oh,
gift could be from anybody.
all right, all right, all right. Okay, and another related question
Sure.
is that when people they start thinking about purchasing property, so one of the main question is how much mortgage I would qualify.
Sure.
So briefly, if you can explain uh, how you guys evaluate the mortgage qualification. Yeah, please.
It's again another very important question, because when you're gonna buy a house, you need to know that how much, like, what would be the maximum purchase price that I can go, and
Absolutely.
how much actually I will be able to qualify. There's a few factors actually depend on, like, what your purchase. The first factor is your income. One of the first actually is your income, how much you can actually afford. It's actually because when you go to the bank, your income level actually based on your payment and your monthly obligations that you're gonna make to your towards your payment. So that's the one of the first criteria. And then also, of course, like, how much down payment you are putting. Let's say you could actually possibly, like, there's a formula that actually works. You use your total housing cost, which is actually includes your purchase, sorry, your regular mortgage principal and interest payment, your property tax bill, and housing cost. So heating costs, it's $100 or maybe $80, depends on how big house you are buying.
Mhm.
So divided by that income that you're actually making, or your gross household income.
Mhm.
So for an example, you and your spouse are making $150,000,
Mhm.
and your monthly obligation is uh, for an example, so $3,000
Mhm.
per month. So you can divide that 3,000 divide by your monthly income, say 1,200, 12,000, or whatever it is, or
Mhm.
10,000, 8,000, and it has to be the threshold of below 39%.
Mhm.
And when you actually make that threshold, and then basically that actually qualifies you. And now let's say when you put more down payment, you can now actually come to that threshold. More down payment means your mortgage amount will go lower, and
Mhm.
then your monthly obligation is going to go lower. So you will be on the criteria based on your qualification. You will be able to. I know it's actually getting more technical. So basically, it depends on your income, and the second thing that depends on how much money that you want to spend your down payment. These
Mhm.
two actually the biggest factor, and also there's another factor depends on like for qualifying. Um, is your credit bureau our
Mhm.
credit history and your credit like overall like how good credit you have or how average credit you have. If your credit score is anything over 680, you will actually be able to get mortgage anywhere. I mean, from
Mhm.
lenders. If other things actually like your income and um, other you qualify. So basically, then down payment so basically, you don't have to worry about that. You're down anything over 680. A lot of people ask me, oh, if I actually go and check my credit more than 3 times, 4 times, is it going to harm my credit score? Technically, it's not, because
Mhm.
you are actually allowed to check your credit, and you are actually allowed to like go to the bank and different lenders and have like you can choose to uh, if you check 3 times or 2 times in 6 months your credit, that's actually pretty okay.
It
It
doesn't
does
have
not
to.
go down.
Okay. Mhm. Mhm.
So in nutshell, it's
Mhm.
just depend on your income
Mhm.
and your credit bureau, and of course your down payment amount.
Okay, in very short, let's say in very quick, let's create a scenario. If somebody is having 100K, let's say salary,
Yeah.
income, family, 100K. So
Mhm.
in current situation right now, approximately how much mortgage that family can get?
So let's say this is just again
Scenario.
it's
This is just an
like
example.
it's a
Yeah.
scenario, and I don't have the calculator in front of me. So
Mhm.
say 100K, depending on this market, you may qualify around $450,000 mortgage
Mhm.
maximum.
Roughly.
Again, it's I have to actually see the numbers,
Mhm.
but that's actually based on, and this is a very good question again because there's a stress test, right?
Yep.
So, and thank you, like it was brilliant question. So 8.5 like it's around 8% right now. So the
Mhm.
stress test means when you go for shop, like the interest rate is probably going to be 6% right now, but
Mhm.
the bank wants to make sure that it actually got like introduced in 2018 that everyone should be able to go at least 2% or 5.25 like over the prior posted rate. So right now the posted rate is 6.45,
Mhm.
which is the prime,
Okay.
and plus 2%. So that brings 8.45.
Mm.
So any anyone who's actually looking to buy a house or looking for a mortgage, they should be able to qualify with that 8.5% of the interest rate. So
Mhm.
depending on that, I would say that with a around say 450 would be maximum for someone looking for a house with an income of 100K.
Mm.
But here is the thing, there are different lenders with the different possibilities and different options. So with a client, let's say with putting 20% down and buying a house, there are lenders that actually you can use. Let's say you have child or children, then you can use the child benefit, um,
Yep.
Canada
Mhm.
Child Benefit. You can use the basement rent. Some of the lenders, if you're buying a for like a rental unit, if it has a separate rental unit, if it has the retrofit status, or without retrofit status, some of the lenders do allow the basement rent too.
Okay,
So
so
the
that can be incorporated. Mm-hmm.
yeah, so if you actually like, put those factors in, and even if you may actually qualify with a less income and use those income towards your buying the houses too. So I would suggest anybody who's listening to this podcast or interview that, feel free to give me a call so I can definitely try to find out how I could uh, make that happen for you and try to match that best option that will cater with your needs definitely.
So that will be more precise, of course, information because
For sure.
everyone has a different situation, different scenario, different income, different down payments. Absolutely. All right,
Yeah.
Ashraf, at the end, so tell us how we can start this process of mortgage application or pre-approval. What information, documents, one need to bring it to you.
Thank you. And whenever people actually come to me and they've always said that, oh, I want to buy a house and how much mortgage I can get, or all these questions that we actually gone through, and everything that you have asked. Um, the main part is the documentations and the right documents, and depending on um, what type of I mean business you're in. Are you actually self-employed? Are
Mhm.
you incorporated? Are you working um for like are you employed or some working somewhere, right?
Mhm.
So based on those factors, like in general, when we start an application or when we start talking to a client, we just want to know who's the client. So we need to see their IDs. So usually most of the lenders that or when we do the application, we prefer to have two IDs. That's and
Two
also
ideas.
social
Okay.
insurance numbers. Um, and then again, like we're looking at the income documents. The self-employed, for example, you're sole proprietary, and we're gonna need the T1 general and notice of assessment.
Mhm.
If you don't have the T1 general, you can just actually ask your um, accountant. They will be
Mhm.
able to provide that. And also for notice of assessment, if you don't know if it is located, you can also go and see our website, and you
Okay.
can be
Mhm.
able to download them too. Um, so there's actually the criteria was those are the thing. Let's say if we're trying to refinance, then we are going to need um, like the information for the existing mortgage you have, how
Mhm.
much debt that you would, if there's any debt that you would like to pay off. Like say sometimes clients actually come and say that, hey, I have credit card debt that I want to pay, I have personal loan that I want to pay off, or in a line of credit they actually have used for home renovation they want to add, right?
Mhm.
So those are the information I need: the property tax bill, and
Mhm.
then the income documents for last 2 years T4, and then pay
Mhm.
stub. And those are, if you're actually working for someone and you were working, say you in a job or like employed, then we'll need the pay stub, letter of employment, and yeah, sometimes we need the bank statement too, just to see, like show the bank that the income is actually it's coming to your account.
Mhm.
um, that's our very general documents that you start with. But for pre-approval, for an example, let's say if you are looking for a pre-approval and for down payment, you are going to buy a house, we also want to see sometimes how much down payment you have.
Mhm.
Actually,
Yeah.
even full. So for the down payment, what we need is 3 months bank statement.
Mhm.
And if there's any, let's say you have deposited any money that's more than $10,000 within that 3 months or 90 days, we also want to see the down payment, where it is coming from.
Mhm. All the trail you need.
Yeah, so basically, let's say that you got the money from your parents, and we want to see that it came from the parents. So basically, there will be a gift letter signed by the parents, or
I
Let's say
understand.
you actually transfer this from your investments, RSP or GICs. We also want to see that, that the money came from your RSP.
Oh, okay.
So we need the 3 month statement for that RSP as well. So
Mm,
these are, let's say when you are incorporated, you have a business and you are incorporated, we do wanted to see the article of incorporation and T1 and notice of assessment. Sometimes actually the lenders, they want to see your, and financial statements too, your income
mm, mm,
statement and balance sheet, just to make sure that and it's coming. And if depending on different employment and sole proprietary, there's been different documents also sometimes been asked, but it's actually also like in I'm just giving you the generic
yeah.
application documents. Yeah.
Mm. Well, thank you so much, Ashraf. Yeah, I can see. I mean, there can be different types of situation for everyone.
Right.
Different type of business people are doing. Some are self-employed, some are employed. So it can be different requirements. So definitely, people they can contact you for a specific, precise information. Now at the end, Ashraf, I would like you to please share your contact information. If anyone like to contact you for your
Sure.
services, please share your contact information.
Thank you. So you can reach me on phone and WhatsApp at 647-864-5236. You can also actually go to the Pineapple website, which is gopineapple.com hashtag just one second. So gopineapple.ca slash ashcon, and you will be able to pull up my profile, and you can also start the application or just send me a message from there. And I do have my profile there. And also you can go to talktalk.ca to get my information there. I do actually have Instagram, which is hashtag underscore con, sorry, ash underscore con at underscore mortgage. So I'm pretty available. You can text me, and I have a promise to my clients that I always take their phone calls no matter what I'm due. If I unless and otherwise I'm in a meeting, I will always go back to the client within very short time and try to make sure that he's been hurt.
Mhm.
There are many different situations where I got called at after midnight, and I took the phone call from the client because it could be important,
Mhm.
and you're when it is important to you, it is important to me. So
Understood.
definitely, it works. We're in service industry, and my promise is to give you the best experience that you deserve. So feel free to call if you have any questions, and I will be always available for you at your service. Thank you.
Thank you so much, Ashraf Khan, for your precious time. It was a wonderful session, and I'm sure our listeners, our audiences, they have lots of good information from you, and I'm sure they are going to contact you. Thank you very much, guys, listening us, and soon we'll be coming up with another episode, probably from some another industry. Thank you very much, and let me close this session. Thank you very much, Ashraf. Thank you.
Thank you for having me today.
Thank you.
Have a great day. Bye bye.